market update. We haven't done this in a while, and the videos don't tend to take as much time to really prepare, going through all the 10Ks and highlighting everything. So I thought I thought I could oblige. Nevertheless, this is entertainment purposes only. I really wanted to do this video because there's so many YouTubers pretty much talking about doom and gloom of the stock market with the drop recently. And, it's not that far from the highs. So what's going on? Are they correct? What should we be scared of? And I guess what's the sentiment in the market, right? And so we have, and please watch the earlier videos if you really want to understand where these numbers come from, but these Fibonacci numbers, and roughly they just come from a zigzag, but we had these Fibonacci numbers for a while, and we had these Fibonacci numbers over here from a drop. And you can kind of see as we hit some of these Fibonacci numbers, we go down, get support at the previous Fibonacci numbers, we have resistance. Similarly over here, we had resistance at one set of Fibonacci numbers, support at this other set from over here from the fall Fibonacci numbers. Now, we didn't have any commentary or really any Fibonacci numbers for this little incident over here, but nevertheless, we do have a Fibonacci number up here, 473, that we had from a long time ago. And look at this, it's almost like magic. There was resistance over here, and after that resistance, it's coming back. Now, where is it going to come for support? Is it going to come all the way back to a previous Fibonacci number? Yeah, that's totally possible. I don't think so, though. I think at the very least, what's going to happen is it's going to get support at this resistance point over here, which is also the 50-day moving average. That is very likely from my perspective, if it continues going down, to find support or end support somewhere on here, even if it goes back to come back up with a doji, something. That's kind of what I would expect. Now, I don't want to predict that. I'm not saying that's what's going to happen, but if it does go down, that's what I would intuitively expect. Now, we do have this crossing of the negative and positive DMI, direction movement indicators, but the red line, the ADX, which kind of shows is this trending, is not between the negative, which is the orange, and the blue, which is the positive. So we don't really have a trend towards the negative yet, which you can kind of see over here. This is not really trending in one direction. And the CCI is showing this huge spike in movement, which we've seen many times before. And after these spikes, it kind of recovers. Does it always recover quickly? No. You can see over here, there's this big spike over here down, came back up the next day, and further down the next day, but then it recovered. So, this is showing the likelihood that because it moves so violently that there's going to be a recovery from that, or if not a recovery, today, or I should say Monday. If not Monday, then, maybe the next few days. Okay, so that's kind of just looking at it from the Fibonacci numbers. Now, we also had been looking at this kind of channel over here, and it was always trending very positively. Now, one of my points was because this is such a steep angle for the stock market, I believe there was going to be a correction eventually. It couldn't just keep going on like this forever. And I still think that. Are we there yet? Well, yes, we are leaving the channel here, but we've left it before and we've come back, and we've left it before and come back. So it's not an obvious signal to me that we're leaving the channel and we're done. And in fact, maybe I'm wrong to have drawn this channel like that, and maybe it should be drawn like this. Or something closer to that. Now, I'm not going to do that because that's not the way I've had the channel so far. There's a lot of touch points that show support for the channel like this, but it's very possible that we haven't even really left the channel. Of course, if we have left the channel, if that is what you think, then it's very possible we'll get a negative trend happening, and that could be quite violent. Why could it be quite violent? Well, because we're at Thanksgiving Day weekend, people are on vacation, fewer traders, especially even in the whole month of December, but especially I guess we'll see what happens, but people are on vacation. Maybe not nowadays. Maybe they're not able to leave and go on vacation, but usually there's a lot more vacation time, and so things are more violent because there's fewer buyers, fewer sellers, and so prices have to change sometimes radically to get those positions. Okay, so definitely expect more volatility in the market, especially around this time, and we'll have to see what happens. In terms of the 10-year Treasury notes, right, the interest rates, I was actually a little bit surprised that it dropped so much. I mean, usually when we have these big moves in the S&P 500, we equally get big moves in the 10-year Treasury. Now, I had drawn this triangle a while ago. I had thought it had broken out, and to my surprise, we're right back into the triangle, and we're touching the 50-day moving average. The 200-day moving average. My apologies. So we're finding some support here. And you can see when we have these triangles, they tend to break out eventually, maybe not totally near the end of it, but eventually they'll break out, move quite rapidly. And so we're getting near the end over here, possibly, assuming this triangle has been drawn right. I'm not saying it has. Maybe, for example, this will extend further. Who knows exactly? But right now, this is where I have the triangle. This is what I kind of looked at. I just thought it broken out. Yeah, we're back here. So what I'm looking for is I want the 10-year treasury to remain a little less volatile, and that will give some support to the S&P 500 to move back up, especially back up into the channel. That would be nice. And so when the 10-year does move violently or does start to move a little bit more out of that triangle, there'll be a little bit more breathing room. That's what I would want to see personally. And in terms of the VIX, this is a little bit scarier to me, right? The volatility index, we're reaching the highs that we haven't had for a while. Well, I should say we've had them for a while, but if we break past that, then we're past what we've had for a while. So we're kind of just dancing on the volatility, and then we're back into much more volatile times. Obviously not the end of the world, but over here was the whole crisis, and so we kind of want to stay away from volatility shooting up too much. So, from my perspective, that one scares me a little bit more because people are going to pay attention to the volatility index. Nevertheless, like I said, people are on vacation. People might expect a little bit more volatility, at least the professional traders. So, when I'm looking at this, do I think it's doom and gloom? No. I think that actually some YouTubers are having a lot of problem because they're focused on growth stocks, focused on, stocks that maybe haven't really shown that they can really provide for their investors in the way that maybe some other blue chip stocks, which have been relegated, and there might be some movement and rotation in the sector. Yes, there could be some people selling their losses for tax provisions. That's always possible. I'm not saying it's not happening, but a lot of YouTubers are talking about doom and gloom. The market's going to go down. I'm not convinced yet. Yes, it could happen, totally. In fact, touching the 50-day moving average, I would almost, I'm not saying I expect it, but I would not at all be surprised in any sense of the word. But nevertheless, is it going to go past that? That's when I'm going to be a little bit more nervous when we break past this 50-day moving average, especially when it's so much lower. Over here, the 50-day moving average was much higher. And we didn't even test the 200-day moving average, which is pretty impressive. So if we break the 50-day and move towards the 200, then I'm going to be a lot more nervous. And we'll have to have another video at that point. But please like, comment, subscribe. Let me know what you think is happening with the market. I would love to have your thoughts, your insights. Thank you so much for watching.